Temasek's net portfolio value went up by $7 billion.
Investment portfolio hit a record high.
Net portfolio value for a third straight year.
Oftentimes we are judged by the investments that we make, but actually the investments that we don't make is equally important.
Over the 50 years since it was formed, Temasek's portfolio has grown steadily. From $354 million in 1974 to $389 billion today. Its top executives reveal the inner workings behind how Temasek invests.
Ultimately, if you build a portfolio, the question is it resilient? Is it forward-looking? Is it able to withstand shocks in the marketplace?
When markets go down, we're not going to be immune to that. What we hope, because we have a more resilient portfolio, we can survive those downturns and come back and then grow beyond that.
It is impossible to have 100% hit rate, so to speak, where every investment turns out to be right. But that's not what we are set out to do.
It's a bit like climbing a mountain, Sometimes you go up and then you come down, but the point is always to get to the summit.
The key mandate that we have is generating sustainable returns for the long term.
We own our assets and we look at returns really on sort of 10, 20-year horizon. And to get to that better returns over the long term, we are willing to take short-term fluctuations in our portfolio value.
Temasek's investments are predominantly in equities. While equity markets can be more volatile, Temasek has been able to weather short-term setbacks and focus on generating sustainable returns over the long term.
Every 3 to 5 years, we relook at our view of the world. We want to have the discipline of asking ourselves the question, are we on the right track? Have the strategy or approach that we have put together work or not? So that periodic review helps us to check where we are. And if we believe that our view were not correct, or things have changed, then we have to pivot, we have to adjust. So that discipline allows us to be more aligned with what we are seeing out there.
Temasek plays the long game, an approach that requires patience and diligence. It's like growing a tree. After the sapling is planted, it needs water and lots of care to guard against weeds and pests. It'll take time before the tree eventually bears the fruits of all that labor. And as the tree grows further, you get compounded growth and a more resilient investment over the long term. Temasek's long-term investing plan revolves around 4 trends impacting the global economy.
The first thing that makes us want to look into a company or a market is really our investment plan. We have the 4 broad trends that we're looking at. So these trends we think are long-term trends which should survive most environments.
So we are very thematic in how we look at it. With such flexibility, we can be in private, we can be in public, we can take minority positions, we can take control positions. So the key is actually to focus on the areas which we think can deliver us better returns over the long term.
Those long-term trends mirror challenges and opportunities confronting the world, like how a rapidly digitizing world is disrupting businesses and consumption patterns, or how populations are aging at an unprecedented rate globally, impacting economies and societies, and how the ongoing climate crisis compels nations and businesses to decarbonize. Temasek builds a resilient and forward-looking portfolio by tapping opportunities that align with its 4 structural trends that cut across geographies.
If I take digitization as an example, there are many ways you can play this theme. We saw that cash was getting displaced by digital payments. And we identified that theme more than 10 years ago as something that was going to have a long-term sort of a secular tailwinds towards the payment space. We say, okay, we want to be involved in the payment space, and we try and find the right opportunities to then participate in it. And it could be, if it was listed, we could buy it in the public markets. If it was unlisted, then you'll find opportunities to see if we can provide growth capital for the company. For example, buy out earlier investors who are already in the company and has already been invested for a while.
At the beginning of every year, we look at a 3-year perspective of the types of investments we want to do in sectors and markets. Where do we want to focus on? Where do we want to hunt? And that's with a view towards what's the shape of the portfolio we want to have in the next 3 to 5 years.
We like to understand the space, not just a company, but the space that it operates in and the ecosystem and the competitive landscape around that. We look at where the profit pools are, who are the major players there, how are they positioned competitively, what is the moat that they have. And we identify then companies that we want to invest in.
That's the work of two groups at Temasek: specific country teams looking at different markets and sector teams assessing industry trends. Together, they identify investments with promising returns, studying firms, sectors, markets, and trends.
Sustainability, climate change, carbon pricing, these are trends we need to overlap in every investment to see whether a company is going to be a beneficiary of that or is going to be threatened by it and how it's responding to it. We have to factor that in at the individual investment level, but also when we look at the portfolio as a whole.
We need to be able to identify what are the next trends that will propel the world forward and to invest behind these structural trends. So we have an annual planning process where we look forward 3 years and look at what our investment allocation ought to be across the firm. If we want to make new investments, we have to find funding from within.
So we're different from a general fund. We don't get money coming in and coming out all the time. What we have to do is generate returns from our portfolio. We receive dividends from our portfolio companies, sell some of them, IPO some of them, and use the proceeds then to make new investments. So then we're recycling our own investments.
Apart from internal sources, a small portion of Temasek's capital could come from bank borrowings and the issuing of bonds. When Temasek invests, it considers both potential returns as well as the impact of its investments.
Actually, what motivates Temasek employees is not just generating financial returns. That to us is a given. But what really excites us, make us work hard, come to office every day, is the extra element of when our capital is being used, deployed, it achieves more than just financial return. It can be as simple as we have enabled a company or an entrepreneur to achieve their aspiration.
What it means is that we want our capital to be catalytic. In other words, we generate returns, but we are also contributing positively to the communities we are operating in. It could be just because our companies we're investing in are creating jobs in the environment they're in. It could be because they're contributing to climate initiatives. It could be contributing to financial inclusion.
Temasek invests for long-term returns and considers the environmental and social impact of its investments. It also engages with investee companies on meeting climate targets, developing inclusive workplaces, and fostering good governance.
So in India, the couple of hospital investments have done very well in terms of the jobs it's created. But also what's been encouraging for us is that it's actively looked to address ESG issues, particularly social issues, to make sure that the employees are well taken care of. In China, the Alibaba investment, a big part of that thesis was that it was going to generate employment opportunities for a number of small and medium-sized enterprises and really improve the lives of several people sort of across China.
Well, Singapore's inflation is at its highest in a decade.
All-out trade battle between the world's
Singapore
two largest
is projected
economies.
to become a super age.
420,000 people in Gaza have been displaced.
Russia's invasion, Ukraine has seen destruction.
So the environment today is a different environment for what we've been used to. And therefore, navigating a portfolio the size of Temasek's is actually a complex issue. The real thing is, while there's opportunity, we also have to be mindful of the challenges and also some of the negative effects.
We have gone through several market turmoils in the past 20 years. Started with Asia financial crisis, SARS, and then a big market dislocation in 2015, and more recently, the pandemic. We suffered drawdown in our portfolio, but we also have very strong rebound after those events. So it speaks to the underlying quality of the assets that is resilient and could allow Temasek to ride through very difficult period. So we can, from time to time, take a more contrarian view because we have the financial strength to deal with it.
Singapore's economy is now to contract for at least 5 straight
Trillions of
quarters.
dollars have been wiped off global markets.
So a classic example is the GFC. Our portfolio declined by 30% during the GFC, but the following year it rebounded by 43%. And that was because there were companies that could survive the GFC. So for example, if you're a company that could not survive it and went bankrupt, we would not have been able to benefit from the recovery. So as a part of resilience, we're also looking at the balance sheets of our portfolio companies. Are they overly leveraged? Can they really survive shocks? And that is an important part of being resilient.
To protect its portfolio, Temasek assesses risk across a wide spectrum of domains.
I think we need to understand whether these are structural or cyclical downturns. We find that actually sometimes in a downturn, that's the best time for us to invest, right? Because it's an opportunity for you to buy into high quality companies at reasonable valuations. So we are quite comfortable with the cyclical shifts, and we must be positioned really for the structural shifts. If we look at the inflation environment today, over the last 50 years, we've all lived in a very benign inflation environment. But today, inflation probably will be higher than it has been in the past. So that marks a structural shift that we need to adapt to.
Among other considerations, Temasek assesses a potential investment based on its intrinsic value and its risk-adjusted cost of capital. That's a projection on future returns factored against the investment's risk exposure. The difference between the two values is called the spread. By evaluating the spread, Temasek determines if an investment is worthwhile and the appropriate scale of the investment.
You've got to look to size your investments appropriately relative to the risk of the business. So I'll give you an example where when we invested in Ardian, which is a payments company out of Europe. Our first investment was $35 million euro in a Series B round for the company. It was a very promising company, but we went in small because we still saw that it was earlier stage and there were risks out there. As we got more comfortable getting to know the company, the management, the business, we stepped up our investment 3 years later in another private round out there. And subsequently, that business has grown to be today a $50 billion company.
And in some cases, it's a question of taking calculated risks.
I would say at the early stages of the e-commerce boom in China, there were 2 or 3 companies that we saw as quite attractive. It was difficult to know specifically who the winner would be. So we invested in Alibaba and we invested in another business. So we came in small in both companies. In the other company, which didn't do well, we didn't invest subsequently. But in Alibaba, we kept increasing the amount we invested and ultimately generated several $1 billion of gains as a part of that. But beyond the business, you need to understand and make a judgment on the management team that's going to deliver on that business. You need the right management. You need the right integrity in the management team. I would also say to understand management teams, you have to be on the ground, which is why particularly when we're doing our private investments, we would rarely do an investment in a country where we don't have people on the ground, because it takes time to get to know management teams. And that's very important as a part of your investment judgment.
There are instances where we've walked away. There was a particular company which was in the payment space and the stock was doing really well. The company was growing very rapidly. But when we did our checks in the marketplace and we talked to other market participants, we found that actually no one else saw them as a competitor. And if you were growing so quickly, that's rather odd, right? So we walked away from that. And it turned out that there was fraud involved and the numbers were fictitious. And so, we dodged a bullet with that one.
Very often, the tough decisions are where you like the business or it looks attractive, but we're just not sure about the management or about the business or parts of it. So you need to track these businesses to see and have an open mind. And you have to be willing to sort of change your mind if facts come up that prove you wrong.
The due diligence process actually does take a bit of time. Obviously, there's no such thing as a perfect information on any investment that you make, and there are always risks involved. More importantly, even if you've identified the risk, not all of that can be mitigated. And you do have to take some risk in investments. We recognize that not all our investments will be profitable. But one thing is very clear is that when things don't go as planned, we must understand what has gone wrong, and when we must be able to learn from it.
Temasek's rigorous decision-making processes on investments have yielded sustainable returns over the long term. But it doesn't measure itself on those figures alone. It's not just about doing well.
We want to try and make sure that, yes, we're generating returns, but that our capital is catalytic. It's sort of doing something more for the communities around us. And that's important for us because our purpose, so every generation prospers.
In fact, when we look at investment, We always look for what else is the extra beyond getting financial return. And that gives us a lot more motivation, a lot more purpose in what we do every day.